I want to welcome everybody to the first ever Big I InsurTech Summit presented by the Big I and the Agents Council for Technology, Ascendia, which is a holding company with TrustedChoice.com, and our diamond sponsor, Travelers, especially Travelers. We couldn't have done this without you, and we thank you for your incredible partnership with the Big I and our members. We all know that InsurTech is impacting our industry, both agents, brokers, and carriers, which is why we're all here today. It is changing our industry rapidly and in significant ways, both positively and negatively. There's good InsurTechs and there's bad InsurTechs. Maybe the panel will tell us who's who. You're going to hear all about that today, what it means for your independent agencies, what it means for our Big I members, what it means in the marketplace. Before I hand this over to Chip, though, I'd like to thank again Travelers, as well as our gold and silver sponsors, which are TrustedChoice.com, Ivans, Accord, and Bond Exchange. We appreciate your support for the Independent Agency Channel and the Big I. Chip Basiocco is the moderator today. He's also the CEO of TrustedChoice.com. What some of you may not know is he also was a broker for many years, so he actually had a real job at one time. Chip's done a fantastic job in bringing the startup company to where it is today. It is profitable, and it's making a difference for independent agents and brokers in the United States. He's passionate about the industry, I know, because I've been with him almost every day this month. And he has a vision on how to grow independent agencies and how to create more business and drive more business to agents and our carrier partners. So with that, Chip, you're the moderator. We have two panels today. Take it away.
Thank you, Bob. I appreciate that. And some days I miss my old job. I've got Jay Eshelman in the back there, who I worked with as a broker 20 years ago. And it's an amazing collection of friends and leaders in our space that have come here today to join us and collaborate together on this. And it's really a privilege to have these gentlemen here. It's a privilege to have them. I'm going to introduce them here in a minute, but it's quite a collection. And I want to thank all of you for coming. And we're in this cozy space, and we're going to get a lot done, I hope, in the next 80 minutes. So hang on. So first, let's start off by introducing our first panel. And the topic is demystifying InsurTech. And we'll talk about what that means, whether it was mystifying at all in the beginning. I want to ask them all to just give a 20-second explanation of who they are and what they do. Chris Klein, Executive Director of ACT.
Yeah, thanks everybody for joining. Chris Klein just recently joined the Big I team to succeed the incomparable Ron Berg about 9 months ago in leading the Agents Council for Technology, but spent 28 years prior to that as part of the distribution leadership team at a super regional carrier, and like Chip, am infinitely passionate about the success of independent agencies and the health of this channel.
Adam Kiefer is the CEO and co-founder of Talage.
Yeah, proud licensed broker, one of the InsurTechs that's actually been licensed for, 5 or 6 CE cycles. So proud to be here, very humbled to be in front of all of you, and look forward to talking with you.
Jason Walker is the president of Agency Revolution.
Nice to see everybody, familiar faces, some new faces. I've been in the industry for almost 2 decades now, which is weird to say, building solutions on behalf of independent agencies, as well as consulting them, and really understanding what is necessary to make an agency tick. So just happy to discuss this particular topic. Thank you.
Good to have you here. And one of the reasons we're all here today, last but certainly not least, is Lou Moran, president of Interagency Insurance Services, and the chairman of the Big I InsurTech Task Force.
Thank you all for being here. This is kind of a labor of love. It's kind of a joke amongst the EC that I'm not the tech guy, but I have a daughter that's 3rd generation in the agency who basically told me we're changing everything because we're going to quit fighting technology in our office, and I realized it's a common theme amongst a lot of small retail, family, and agencies. So I'm here to try to help demystify and get people to change the culture.
Absolutely. Well, and here we are. So let's tackle it. So we have a number of topics. I don't know if we'll get through them all, but we'll try to do our best. And then if we have some room at the end, we'll take a few questions. I think there's microphones on the corners, but We might go long enough that that won't be necessary, but hang with us. Let's see what we do. So the first topic is we kind of want to level set, like what's the current state of the industry? Where are independent insurance agents at in terms of their adoption of technology? I don't want to just say InsurTech, but all forms of technology. And I kind of want to start with you, Lou, because one, you know, why are we here? Why have you gathered us all here? But tell a little bit about your story and where you think we are.
Well, I mentioned I have a daughter in the business, and I guess now 2 years ago, we changed our agency automation system, and I did the right thing on the front end. I let all the account managers and CSRs be very involved in picking it, and then I tried to force it to do business the way we've always done business, and that was a complete train wreck. And then finally one day my daughter said, "You're out, you're done, I'm taking over, we're changing our processes, we're changing procedures because we're going to work with technology and not fight it like I was trying." We'd been very successful. Our families had good living out of it. But then I realized she was right. Don't ask this younger generation if you're not willing to listen to their answers and embrace it. And I was. My wife, who's in the back, she also told me, if you don't, I'm going to slap you in the back of the head and get you to do it. So Emily's been great. It is something we have to do. It is a cultural change, and it is hard, but the benefits far outweigh staying stagnant. We don't want to be like the dinosaurs and disappear.
Absolutely. No, we don't. And Chris, I'm going to go to you next, because as the executive director of ACT, you know, this is sort of your space. Like, where are we all at? So do you have any stats you can share, anything at all? Where's the channel at?
All over the place, right? And so there's 40,000 independent agencies in the country right now based on the latest Universe study, and I somewhat cheesily say that means there's 40,000 different opinions on how to effectively leverage technology to run an independent insurance agency, but it really varies greatly by size and by specialization. So we see some of the larger firms have been able to invest more significantly in newer tools, but in the middle of the bell curve, there's a lot of privately held firms or agencies that are out there that are really looking for ways to become and remain viable and to figure out how to embrace technology. And there's confusion, there's uncertainty, they're being overwhelmed by a large number of options, and forums like this are really existing to help try to create some clarity around how an agency can take their existing strategy or an evolving strategy and business goals and effectively leverage technology to bring those to life. So it's all over the board when it comes to adoption. There really is not a perfect answer for that.
But that's one of our strengths, right? We always say that our strength is our independence.
Totally.
But it's also our challenge. And
yeah, it's a blessing and a curse at times.
at the same time, right, exactly.
Bringing us all together to talk about it's the key.
So Adam, you're one of the entrepreneurs that's trying to bring something new.
We're a good InsurTech.
That's right. Good InsurTech. Everybody that we invited is good InsurTech. There is good InsurTech, plenty of it, and you guys all are. But anyway, Adam, you're literally out there trying to bring a new product, a new technology to agents. What are you seeing? Where are they at? Where are you meeting them?
Yeah, I think internally we've kind of joked because I'm nerdy and I got a bunch of kids, and so we watch the Marvel movies, right, in terms of like the phases of the Marvel universe, right, and so we've kind of relayed that into InsurTech in general, right, and I think we're kind of in this phase 2 heading into phase 3 of InsurTechs, and you had, the first wave was, your Nexts and your Lemonades and your cover wallets that were kind of going right at the agencies, right, and threatening, the existence of the channel. And I think all those guys, none that I can think of are an exception, have really pulled back from that, right? Like all those guys have started appointing agencies or doing things like that. And so I think as we move into kind of phase 2, phase 3 of the InsurTech universe, I think collaboration and integrations really across the different platforms is really where this whole thing is headed. And I think bringing tools to the agencies, whether those guys want to do it, admit it or not, we always believed, and I think now they also see that agents are really critical to this entire channel, especially when you're looking at the commercial side of things and think definitely more complicated risks, right? You guys aren't going anywhere, and that's a good thing for all of us. So I think we're kind of heading in this phase 2, phase 3, wherever you want to kind of put us, but I think collaboration, integrations, deeper integrations into AMS platforms, things like that is really where the whole thing is kind of headed. You guys are central to it.
Thanks. And Jason, I kind of saved you last because you've done a lot of consulting for agents. So you've talked to hundreds of agencies in some of your previous roles. So where do you think we're at?
We talked about this a little bit on the podcast today. I reminded whoever's listening that as an agency, we've all been using some hardware and software, whether that's just working on a spreadsheet, we're leveraging a Microsoft product, and we pick up a telephone, that's a piece of hardware, that's technology, it's wired into your wall. So we should give ourselves credit on where we're at. And then as I talk to agencies, I'm like, let's think about this in the most simplistic fashion possible. If you were to take that proverbial pencil and put it down in any place, whether you're trying to market, prospect, sell, retain a customer, where would you like to do that? And they're like, but you're not talking to me about technology. Yeah, because there's a lot of technology that can solve for that. What I'm asking is, where do you have that particular need? And then let's look at 3 to 5 of those needs and solve for it. And agencies really start to gravitate towards that conversation because it's them first. It's not all of the noise that we hear from the providers that are out there. So I would say that as an independent insurance agency, you're well on your way. And we need to just start to maximize some of those tools you already have in-house before buying the next incremental one. And that's a good place to start.
Okay. So I want to talk, and what I'm going to do, just to like mess with the AV guys, is I'm going to switch over here, and that way Jana doesn't have to look at my back the whole time. And now it's Ross that gets to look at my back, and Andy. So now everything's switched around. All right, so we're going to talk now, but be more specific about where we're going. So that's where we are. Let's talk a little bit about where you see progress. So, and I want to get a little bit specific, like which areas of agency technology do you see specific progress? Is it on marketing side? Is it on the submission side, quoting? And I'm going to start with you, Adam, because I know what you're going to say.
Perfect. A little biased on this answer, but I mean, really where Taligent's focus is with our wheelhouse product, and it's really all about the submission process, right? So as an agent, I worked on the carrier side as well, wanted to streamline and really close the gap between carriers bringing in technology, doing automated underwriting, predictive analytics, all that kind of fun stuff, and bring it into the agency where you had a really small commercial for a while was the most profitable line, arguably, for a carrier, and the least profitable line for an agency, right? Like, and so that's really the gap that we want to choose to attack. And I think we've started with a solution and looked for a problem, or started with a problem and started to look for a solution, where I think a lot of the other InsurTechs kind of came with a solution and started looking for problems. To Jason's point, like, know what your problem is. And so the submission piece is really where I think there's a lot of advancement coming in the APIs from the carriers, now being able to kind of drag that back into the AMS systems, doing things like automated renewals, pull your renewals 90 days before a renewal, re-quote it automatically, drop it back into your system so your CSRs aren't doing that kind of work all the time. Cross-selling, right? Like if you have a workers' comp app and a GL app with about 100% certainty, I can probably give you a cyber quote without any additional work from your staff, right? Pull the information that we already have, reuse that, push it back out. And so I think becoming more and more efficient in that submission piece is really where we've chosen to focus. There's obviously some other interesting areas, not as interesting, but that's really where we've kind of spent our time, is on the submission piece.
And I'll just add real quickly that one of the other originators of this conference was a conversation between Bill Devine and I, and he was talking about the carriers wanting to see those submissions coming through in an automated way, and that's one of the things that it's exciting to see you guys working on. So I'm going to go to Jason next, because I think, one, you were last time, but plus you have a good product. Where do you see people taking the next step? What's the next tool they're wanting to add?
The focus, whether it's with Agency Revolution or prior to that when consulting, a lot of the agencies would say, listen, we've got the website presence in place, we've got rating platforms in place, and of course we've had a management system for a while now. What we're trying to solve for is that personalization and that interaction with the customer once they become a customer. So what types of solutions exist in the marketplace to be able to help retain and grow share of wallet? And that seems to be a major focus now, because a lot of the transactional stuff is mature. What's not so much yet is the back-end retention customer service side.
Okay. Let's go to a real agent and find out the actual answer. Lou?
Lou, that was correct.
Yes, that was very much correct.
What are you thinking about adding at your agency?
Well, we're looking for things to eliminate the transactions, cut them down, so that we can focus on being what we are, advisors to our clients.
Okay.
I don't need account managers and CSRs spending 10 minutes to get them an auto ID card. And yes, as Jay and I were talking earlier with you, even the high net worth clients will take a digital card, even though everybody thinks they're all high touch. But buying has changed. We've seen that over the last decades. Everybody wants it quick now, so we have to meet our customers where they want to be. And it's all over the board. We have customers that still want us to put the policy notebook together and deliver to them. We have other ones that don't want to ever see it again. They want it delivered to them electronically, but we have to eliminate all the minutia, little tiny steps that bog us down so we can get back to focus on being advisors to our clients.
Okay, good. Chris, you see it all. What are you seeing the members in general expressing interest in doing more of, getting more into?
Yes, yes, and yes, I would say, but one of the things that's interesting, and I don't know that there's a formal term, so I've been using mid-funnel, and it's not the sexy and romantic stuff, but it speaks to some of the minutia and the solutions that are starting to eliminate the need to multiple enter. And so having one of your CSRs or your account execs enter the same mailing address, driver's license number into 5 different systems just to get a quote, to be able to solve for a renewal who's looking for different coverage or different pricing or a net new piece of business. Those are starting to gain real traction and real appeal. They're not filling the funnel, they're not necessarily solving claims or billing issues, but boy, they're really freeing up account execs and CSRs to add that advisory role and that human touch. They're letting humans be humans and interacting with consumers rather than just data enterers. And so with RPA, which is a pretty basic way to transfer data from system to system, or more recently API and direct integration across platforms, the tools that are allowing people to just enter, or a human being entering something once, then allowing that to get where it needs to go to take care of the customer or the prospect or the solutions that are starting to win.
Okay. Anybody that has ever visited the trustedchoice.com website knows I really like real stories from real agents recorded on video, hundreds of them, because I think agents need to hear from other agents. So I would love it. I think you guys all probably know a success story of a real agent. You don't have to mention the agency name, but if you want to, why not? It's a success story. And also always interested to hear of a funny failure story as well, if you have any of those. I'm supposed to tell you who's first, right? All right, let's go with, and I was supposed to walk over there. I'm not doing a very good job of this. Let's start with you, Jason.
We spend a lot of time on the retention renewal side, and we know that independent agencies are great at retaining customers. So where we're challenged as a software provider is how can your solution incrementally lift us 1, 2, or even half a percentage point on the retention side and renewal side. And so we have customers that when they are building out communications based on the actions that are taking place in an agency management system, they are able to communicate at the right time with their customer and tell them what they should think or do next. And that comes out of the data that's being transferred between the marketing automation and the management system. So it makes it very real and personalized depending on what that exchange is between the customer and agent. I will also say that the failures are sometimes marketing automation systems are looked at as a blast system. And if a customer gets in there and just jams all their contacts in and pushes out, and we've seen it happen, the wrong message goes to the wrong customer base. And we're ultimately responsible for making sure our solution's getting used right, but we've seen that failure a time or two, and it's our fault.
And that's very funny when that happens, right?
Very funny. A lot of laughs.
Chris, can you think of an agency that tried something and succeeded, or tried something and learned by failing?
Yeah, and you can buy me beers later for the plug for trustedchoice.com because it was not intended in my answers, but in my prior role on the carrier side, worked with a lot of agencies to help them try to fill the top of the funnel. So we sponsored a co-op program to encourage agencies to take advantage of trustedchoice.com. And so we started to get the reports from trustedchoice.com, and I was took a phone call from an agency principal who quite candidly told me, this sucks. The leads are horrible, we're not getting any if we do, and I'm not really sure we want to renew it. And I said, well, what do you mean? Let's start the talk, and we walked through it. And they said, we haven't gotten a lead in months, or a referral, or to use the right word. And I pulled up the reports that the Trusted Choice team sent me as a carrier, and I said, well, that's just factually not true. Looks to me like you're getting 7 or 8 referrals to your agency a month. Well, who are they going to? Looks like they're going to John or Jane Doe. Well, why is it going to them? Well, I presume because that's the name you put in the system when you filled out your profile. All right, so they tried that a couple of months, and then they said, well, now they're horrible referrals. They've already bought. Nobody's returning their phone calls. And so I started to probe a little bit, and I said, well, how quickly are you contacting these folks? Does somebody know that it's their job? Are they treating inbound SEO-driven or internet leads and referrals differently than a typical referral? And it was no. So long story short, it started to create this conversation around the people and the process that supports the technology, which is something I'm a huge proponent of considering. So nobody in that agency knew they were getting a referral. They didn't have expectations about what to do, to do with it, or how to handle it differently than somebody who would have made a phone call. So they started to think through that. They got all these things to the right person. They created an expectation. They learned from some of the tools that Chip's team put out, and they started to have more success. And they started to concede that this wasn't going to alter their agency and allow the summer home acquisition, but these were meaningful things that they could act upon, and they started to see greater success. So a failure to at least something that was a moderate success. And the reason I use that is that it magnifies the importance of thinking about your people, setting clear expectations for them, and having processes that support that so they can actually take advantage of the technology that you have.
Absolutely. And we should never be afraid to try something new. And I, frankly, always expect it to go wrong a little bit the first time. So you can adjust, you can tack, right? That's the whole point. I want to I'm going to switch gear, and I'm going to pick up the pace a little bit. So sometimes you don't get to answer every question. We just move right on. ROI. Oh, I can't go. Well, yes, I can. I want to talk about ROI. So there's 3 ways to look at ROI. The agencies have to have an ROI. Lou, I'll probably go to you in 1 second. But then after that, the technology providers have to have an ROI. They have to have a business. And Chris, our carrier partners have to have an ROI on all this, and you just came from that. So I want to talk about all 3 of those angles. I want to start with you, Lou. How should agents be thinking about ROI measuring this stuff?
Well, it's hard in a small family agency to really do it, but how we look at it is, are we growing, and is our staff able to process the business without having to kill ourselves by finding additional staff, which is really hard in this economy right now. So being able to utilize all the technology to handle more quickly, more efficiently is how we're managing it, by eliminating transactions that I mentioned earlier. It flows straight to the bottom line by doing that without having to add a lot of bodies, a lot of extra work hands to it.
Okay. Adam, what about from your business? You're running a business here. So is InsurTech a profitable business for a startup, and how does that work?
Depends on the InsurTech, I suppose.
Switch over here.
Yeah, I mean, we've kind of chosen to have a model, again, because all of our tools are built for the independent agency, and we understand that margins are tight in your agencies. And so, providing you a solution that, hey, we can, for $100,000 a month, we can solve your problem. That doesn't actually solve any problems, right? And so we've chosen to kind of use a hybrid business model where, we charge the agencies, and then we actually push a lot of that cost back to the carriers for essentially kind of the convenience of our platform. And what we do with the carriers to kind of incentivize them, and we do the same exact thing with our agencies, is really kind of the data that comes through all that, right? Like if you're a carrier on our platform, you can come in there, you can say, this room sent in 1,000 applications last month, and Travelers was able to quote 500 of them, and the 200 that they didn't write, it's because it was 35% more expensive than the rest of the market on average, right? And we can do the exact same thing for the agencies, where you can come in and, I worked at a carrier and literally sat across from some of you, begging for more business, right? And coming in and having those conversations, saying, write more business, write more business. As an agency owner, being able to have that data and have those conversations for contingencies and relationships going like, yeah, I would love to send you more business. I won't pick on Travelers because they're a sponsor, but Liberty Mutual. But every time we send you business, we sent you 30 applications last month, and you only quoted 5 of them, and the 5 you quoted, you were too expensive, right? To be able to arm the agencies with that kind of data, I think is really, really valuable from an ROI standpoint, from a contingency standpoint, relationships, all those things, right, rolling together. And so, from our perspective, we try to kind of be the middle player there, where we arm you guys with data, we can arm the carriers with data, and then, essentially we kind of make money on both sides of it. But the idea is to not have to charge either side an exorbitant amount, right? To make the margins make sense for both sides is the business model we've gone with.
Okay. Chris, I really do want to hear. I know you're an ROI guy, and I know Craig from West. There must be a lot of ROI conversations at Westfield. So, share a little bit. What do you think the carriers are seeing in terms of what's their ROI in InsurTech? What do they want to see out of it?
So a couple thoughts on that. First, I would echo what Adam said here, because it's creating a system where an agent and a carrier are both looking at the exact data set allows for a more objective business conversation.
And I can relate to those conversations where you ask for more business and they say they're quoting X and this is the thing, and you're looking at a report and they're looking at a report, and there's not a single version of truth for the activities. Makes it impossible to have an effective and healthy business dialogue. But so the carrier side of things, right, I just maybe across the board here would say this. I do believe that most InsurTech startups, applying some level of noble intent to this, have identified a true and meaningful point of friction or a point of pain for carriers and brokers, and they're trying to solve for it. What I think has been problematic and is getting a little bit better are the technology companies and their appreciation for the economics of our industry. And so just because something is a pain point, you have a solution that solves the pain point, doesn't mean that it makes sense to disrupt an agency or to spend the money on the carrier side or whatever it is to invest to solve the problem. So those things have to start to create more aligned. So I think pricing strategies for tech companies are evolving as they understand the economics of the industry. But we're not manufacturing widgets here. Every customer's different, every risk is different, and this is a risk transfer industry. And quite candidly, this is oversimplifying it, but everybody in this room has a job to ultimately make sure there are funds available when a customer has a claim. Everything kind of rolls up to that type of thing. And so if you take the spirit of the fact from the carrier's point of view, there's $1 a premium, and I don't know if Craig Welsh is in the room. He was on the team at Westfield with me. We talked about this a lot, but when there's $1 of premium collected, 60 cents of that has to go on a shelf immediately for that carrier to remain financially solvent. And there's reputational and regulatory and reinsurance, all those types of things. So that remaining 40 cents has to do a lot of things. It has to pay for my salary at association, it has to pay agency compensation, and it has to pay for legal expenses, and whatever's left is available for innovation and investment in InsurTech technology. So I think the ROI side of the thing, it's very popular for technology companies to look at carriers as having the deepest pockets, but they're also the ones bearing the insurable risk, which is why we're all here in the first place. So the concept around ROI on the carrier side isn't risk averse, it isn't reluctance to change, it's actually making sure that they're there for the time of need of our customers, which is really what we're all here for anyways.
That was really good. Can I borrow that for my next trustedchoice.com board meeting?
Certainly.
I
I can be hired for side, no, I'm just kidding.
Perfect. All right, next topic is actually about a quote, and Jay Eshelman, again, is in the back of the room there, and he and I both worked with a CIO many, many years ago named Nick Ellsberg. He was the CIO of Gallagher in the late 90s and early 2000s. And we were challenged, with some problem. I don't even remember what it was anymore. And I was upset, and he kind of, coached me. And he said, "Chip, don't you know silicon is easy, carbon is hard?" And I was like, what the hell does that mean? But he was the CIO, and I just went on my way. Well, it was like a metaphor, and he was using kind of old words. But what he meant by silicon was he meant the technology part of our job as technology people. That wasn't really the hard part. The hard part was to get all of the people at Gallagher to embrace the new technology. Try it out. Give it a shot. Don't push back just reflexively. We came up with these ideas to make things better. Help us make them better. So it's really about culture. That's what he was really talking about, is how do we build a culture of innovation? And I think every agency out there, and I've done this poll before, I just did it in Tennessee last week, and I said, you guys don't have to do it, but raise your hand if you have somebody in your office that is that person you just know is going to push back if you have a new technology tool, and like 90% of the people raise their hand, right? So we all know. In fact, sometimes I'm the guy. So I'm going to start with you, Jason. What can agents do, and you've coached a lot of agencies, what can agents do to try to cultivate a little bit of a culture of innovation and embracing this stuff?
We would make sure that anyone that touches a process or a technology or a customer, that from leadership to those that are on the front lines, there's some representation of each one of those in a discussion. And that way, from the beginning, those that might be most adverse to change should be in that room and state why. And they're usually sometimes the best producer, and they're like, look, I can knock through this faster than I can if I jump into this technology. And so if you have those voices in the room and you're talking about the challenge, now you're trying to strip down the walls, and you can always point back and say, this person was in here with us when we decided to innovate around this process. And so my recommendation, and it sounds kind of generic, but it's the truth, is be human, have a bunch of people in the room that can affect change, and those that are going to push back, allow them to say why they're going to push back. And that's usually the most valuable information to then set yourself up with a vendor or technologist to say, these are the things you must solve in order for us to make a decision to work with you.
Yeah, absolutely. Adam, do you have a short answer to that one?
Yeah, internally we call that person Marge. I don't know, apologies to anyone named Marge in the room. But yeah, I think that's, I've met probably every InsurTech out there at some point or another, and I think it's a consistent challenge that we all deal with is getting past Marge. And so for us, it's really finding, similar to that, but really finding that one champion internally, and it's usually not, again, no offense to people in this room, it's usually not the agency principal, right? We can usually convince the agency principal that we can bring efficiency, we can do things better. That's usually not the hardest sell. The hardest sell is somewhere in the middle, right? And so getting a champion that's kind of in that middle layer is really when we've had the most success. Somebody who can kind of buy in, where we open up channels of communication between our staff and them, where they're using our product going like, hey, this is great, but it'd be even greater if it did this, right? Like, and being able to have those open channels of conversation is really important. And I think InsurTechs in general, speaking broadly, are pretty approachable. We're looking for feedback on the product. We want to make it better. And so opening up those channels, having a champion internally has been critical to us.
Lou, you get the final word on this question. You run the agency. How do you get past Marge?
Well, I would have been Marge in the office. But we took it a little different. We found this, to get the buy-in, we found the problem that was the easiest and quickest, that everybody could see the success of it, and we're building up to the bigger and the harder ones. So, it's KISS, keep it simple, stupid.
Yep.
And it does work, and once you get the buy-in, like I said early on, I did it right on the front end, looking for new automation, then I muddied it up, but we're making steps. It is hard. It is culturally. It is a change in the way independent agents have worked for 200 years. But it's the right change right now.
It absolutely is.
And don't be afraid to talk to your partners and your friends and your agent friends, because they're all in the same boat. We got to share the same stories and the successes and the failures. It's okay to fail, fall down, bum your knee, get up. Dust yourself off and keep going.
And that's what we're doing here, right? We're just sharing with each other and encouraging each other, and that's exactly why this is great. I got to be mindful of the clock. I'm a total amateur at this, but I think I'm down to about 5 minutes. So what I'd like to do is, if anybody has a question, this is a unique panel. We'll take probably time for one question. I forgot to set this up in advance. So I see a paddle from Mr. McBride from Michigan.
You should not have taken his question.
So can I just take you guys back to the ROI topic? Do you all think that one of the prohibitions in agencies adapting technology and integrating it is they're taking the ROI too literally in terms of the return on what I'm going to get for the expenditure of the capital, and rather not looking at it, is it making my enterprise better in multiple factors? Lou, you talked about it a little bit, you hinted at that, but I'm just wondering if we've been taught to take this way too literally in terms of the ROI, just from your perspective.
I will say yes, as I tried to, wasn't very eloquent about it. It's really about growing our agencies without growing our expenses, but we are growing our expenses by all the technology that we're trying. We were throwing everything against the wall, and it's $500 for this one a month, it's $1,200 for that one for the month, and halfway through the year, you look and go, why are our expenses out of control? Well, because we didn't do our job on the front end of finding the right technologies that would help us improve our efficiencies and be more efficient and be more profitable. And I think that's where we have to take the step slowly to figure out what works for us. But in a family-owned agency, there's agencies that run as a business and there's family-owned agencies, and that's a very different playing field. So it's hard to drop that down to an ROI other than headcount not going up, but our production is going up.
Can I
Yeah,
jump
please.
in there? I think, to your point, like simplifying it around maybe like return on sweat equity. So I was working with an agency that was in commercial, and they're like, we do so many contract reviews, and it takes us so much time. So if we could find a way to throw some of those into some kind of automation, we'd save probably half an hour per contract. And so once you add that up over thousands of contracts, assuming that the technology works, and it actually did for this agency, it saved them a ton of time. You can back in at some point to that return on investment, but people understand their time a lot better in most cases than they will to that, what you're saying, specifically ROI. Great question.
Chris or Adam, anything you want to add?
I mean, I would double down on the time aspect, right? I mean, we see a lot of improvement in, agencies where we run studies, and, it took us, before we put the system in, it used to take us 30 minutes per every application because we were logging into 3 different portals to bring quotes. We use this one, we can do it in less than 10 or whatever those numbers are, right? Like, so kind of looking at ROI that way. And I think the other thing that I think, agents have been conditioned to a little bit is the upfront investment of a new technology, right? Like putting in a new AMS system is a huge investment, not only in terms of dollars, but maybe more in terms of staff time, right? And the transfers and all the things that go into that. There are a lot of technologies, and I can speak for myself and a lot of others, where the upfront investment isn't the same kind of time, right? And I think agents have been hesitant to go like, I don't want a new technology. And it's like, well, some of this is a lot easier than it used to be, right? Like not pulling out an AMS and putting in a new AMS, or just utilizing a submission management platform, or utilizing something else. Like, there's a lot of easier, lighter lifted tools now, I think, that exist that kind of scare people away, going like, oh, it's something new. And it's like, new doesn't have to be bad necessarily, right? So that upfront investment, I think, is reducing quickly.
Great. Chris, you don't get to talk about ROI twice, not in one day. No way. We're going to move on to the next panel. I think we have like a short break. I'm going to please thank our guests. So thanks for coming back and joining us again. I have a second panel here. First panel did great, and apparently, see, I'm talking fast again. I'm going to try to talk slow, and we're going to enunciate. So welcome to the second panel. And the second panel is a little more strategic, and it's a little bit more meant for us to kind of look over the horizon a little bit. Okay, the first panel was sort of where are we at as a channel, what are our current challenges, what are people working on today, and the next panels, we're going to kind of look into the future a little bit. And so some of these topics are purely speculative, and don't get too worried, it's okay. We're just going to have some fun. So first I got to introduce them, and I'll start on my left here. This is Jay Eshelman, the president of Gallagher Select Small Business, Personal Lines, and Affinity. That's a lot of responsibility, Jay. You've come a long way in 20 years. Go ahead.
Yeah, Jay Eshelman, been with Gallagher about 20 years. It'll be easy for me to talk slow because I'm from Oklahoma. Like he said, I oversee things that are not core to Gallagher, but that's been a fun challenge. Gallagher's largely middle market, large account type of operations. And I took on the challenge of nationalizing our small business, our personal lines, and then building an affinity business in Gallagher. And if you're not familiar with that term, that's essentially where we're selling insurance through third parties, strategic partnerships and things like that. So glad to be here.
Glad to have you, Jay. Next is Reed Holtzworth. I'm going out of order, sorry. We're just going to mix it up. We're having fun. Yeah. Reed Holtzworth, CEO at Ivans.
Hello, everyone. Reed Holdsworth. Prior to Ivans, I was the founder and CEO of Tech Canary that got acquired by Applied Systems. Prior to that, I owned an agency, agency founder, and yeah, happy to be here. Thank you.
Good to have you, Reed. Reed and I both live in Milwaukee, by the way, which is kind of nice. So
we do.
We get to
Milwaukee,
see each other.
the good land.
And Jason's Jason Liu's not that far away. Jason Liu, CEO at Xywave.
Absolutely. Well, hey, thanks for having us, Chip. And I guess maybe if I don't mind spending 60 seconds real quick, it'll help you kind of better appreciate my point of view. But I'm obviously the CEO of Xywave. Many of you have heard of Xywave. I guess what I'd say is really in the last 5 years, everything about Xywave has changed. So about 5 years ago, I took over as CEO, and Xywave's gone through this massive transformation where we've tripled in size. And we have, acquired 10 large, software players in the agency space, and 8 in the last 2 years. And we've spent almost $1 billion buying these companies. And I think it's safe to say at this point, we're now kind of the third large platform player in the space. There's always been Vertical and Applied. Now Xywave is the third major platform player in the space. When you look at size and scale, we've got 15,000 agencies. Many of you are our customers, so thank you. But we also have about 1,000 carrier customers, et cetera. But also breadth and depth of software. So we have a full suite of software across commercial, personal lines, and benefits. But really, the only thing I'd add is that we really try to do things from an innovative standpoint. So we'll talk a bit about innovation and the future, but I think we've tried to do things different but better.
Good. And last but not least, Bill Devine, SVP Travelers, our diamond sponsor, and the instigator of this thing. So I'll just share the story so we go fast. This meeting and the series that will probably come after it came as an inspiration from Bill. He called me up and he said, you know, the Big I family is the perfect place to help agents to become encouraged about embracing InsurTech. And I said, I can't disagree with that. And he said, Chip, you should do something about it. And I said, I'll. So then, anyway, a lot of people have helped since then, but it was a conversation that you and I had that kind of kicked that off. So thank you very much for doing that. So let's get into the first thing I want you guys to share a little bit on is, you heard the previous panel, a lot of good topics there, and I just want to get your reactions, rebuttals if you want. Jay, you go first.
So Marge is getting a bad rap. But Karen is very relieved that Marge is now in her place. To the question earlier from Mr. McBride about the ROI, I think that it's easy as you're running a business to get focused on the numbers. Somebody mentioned, you know, time. I think just the quality of life for our account managers at the desk every day is something that should go into our calculation of an ROI. And what I mean by that is the more Marge is smiling as she's doing her work, the better life is for everybody. For our customer, for Marge, for us. And that's easy to miss, but I think InsurTech can really help create some space in this increasingly crowded, complicated world for Marge's job to be a better job.
Yeah, so the future is bright for Marge.
Yeah.
All right, I like that, I do. Bill, any reactions you had to the previous panel? Doesn't have to be about Marge.
No, well, I do want to talk about Marge, but I thought it was very insightful that you quoted me, so that was I appreciated that. Sure. So that was my favorite part of the prior panel. But you know, leading transformation initiatives at a carrier really forces us to think about ROIs and things like that, very similar to what happens in an agency. And our big transformation, our big change, just shift in mindset, has been going from thinking of each investment and the return that each investment has, and more looking at the longer game, right? And so we talk much more about return on equity than we do around return on investment. And what that means is that when we look at how Travelers is performing, we look more at what do we need to do differently in the next quarter, in the next year, in the next 3 to 5 years, and what investments do we need to do in order to drive those outcomes? As opposed to saying, well, do I bring in this piece of technology, and does that piece of technology have a good ROI? That the more you can focus and the more that we at Travelers focus on solving real business problems with technology, or process change, or hiring people, the more we can look at the longer tail and look at, is this making our company better? Not, is this one purchase of a piece of technology or a piece of software going to have some type of monetary return? Because the reality is, most ROI work is a bunch of consulting BS, right? Like you trying to track specific return on a specific investment, if you can actually point to specific policies that you wrote because you put in a piece of technology that you wouldn't have otherwise written, that's a pretty unique dynamic that you get that traceability back one-to-one. It's more about, are you continuing to invest in your business? And are those investments helping you get to where you want your business to be?
Now you're invited to the next TrustedChoice.com board meeting. That's perfect. All right, I don't need to do this anymore. I'm going to skip over you, Reed, if that's okay. I'll come back. Sure. Jason, what do you want to
The only
react
thing I'd
to?
add, I mean, obviously there's a lot to talk around TCO and ROI. I think the only thing I would maybe want to just add is, there's a lot of discussion around digital quoting and submissions. And, Xywave, we obviously have acquired 2 AMSs, but we also acquired 5 digital quoting solutions. And so it's an area that I feel I'm particularly passionate about. And what I would say is that, submission is definitely one of the key components of a whole quoting process, but there's actually 5 steps. And submission, there is friction, but there's also a lot of friction in the market appetite area. There's also a lot of friction in the actual comparative rate. And then obviously, how do you bind an issuance? And so I just want to kind of paint maybe a larger picture that we'll talk about around digital quoting and as the world moves increasingly down that path.
Okay, we're going to get there in a minute. Reed, reaction to Marge or anything else?
I really like what Jay said. I mean, it was really smart. I mean, because it's real. It affects the culture of the agency, and good culture is good business, right?
Absolutely.
And so, there's a really good spin on that. I thought it was funny how Jason started by saying, hey, we've come so far, you know, using a phone and spreadsheets and Outlook. That's technology. It's not wrong.
No, it's not wrong.
You know, I'd say about adoption of technology, a lot of people go out there and they buy all these shiny objects and all these things when they're not actually adopting the systems that they already have.
Yeah.
Right? And we don't really talk about that because we all love selling new technology to people. But I think if agencies truly adopt and really dig in on what they have and use that to the fullest, and then look for real problems that they're in their agency, and then solve those problems leveraging technology, you get adoption. But the change management and all of that, the Marge problem is very, very real. But I like that, the culture, you know, it's helping that culture too. And once it's done and you see those transformations within those organizations, it's very, very powerful on a lot of levels. So.
Absolutely. All right, now this is when I'm supposed to switch, and remember to talk slow. So I'm going to be over on this side. So next we're going to talk about something that's a little scary, but that's fun, right? Something that's going on in the news right now is something called ChatGPT. I'm sure you've all heard about it. Lou and I, back there, we did a live demo last week in Nashville and scared a whole bunch of people. That was kind of fun. I don't want you to be scared, I'm kidding. But it is really interesting technology. It's a form of, it's not really artificial intelligence, but it's a really sophisticated language recognition and generation tool. And I'll let these smarter guys than me. Jason, why don't you react first? What do you think about what ChatGPT might mean?
Yeah, I mean, you know, I guess maybe it just come out of two ways. One is just obviously currently GPT is really more of around predictive text recognition, right? But obviously the idea is it's going to be a general purpose AI engine over time. So I think, you know, when we got to talk about it in like phase one versus future phases. But I guess the second thing I would just add is that, you know, to help kind of provide some insight from my perspective is, myself and a guy by the name of Don Bailey, who many of you know, Don's kind of a legend in the insurance industry, wrote an ebook, which I encourage everyone to read, please. It's free. You know, just go to our website or you can download it anywhere. And really it's about the future of insurance and how over the next several years it's going to change, particularly the way you go to market and sell. You know, it's called Digital Revolution or Sales Revolution 2.0. Don was the former CEO of Willis and president of Marsh, and now he just was anointed the head of distribution for AIG. But the point of the story is that one of the things that Don says in the book is that the world of insurance agency is going to go from relationship management to consultative selling, right? You have to provide commercial insights to your clients. And so I guess the point in tying it to ChatGPT is that ultimately what ChatGPT is providing is automated knowledge sharing, right? And so I would encourage you to think like tactical stuff increasingly is going to be done by AI. And so really it's the more insightful, advanced things that hopefully you all can help focus on that'll keep you guys providing value to clients.
Okay. And Bill, I might go to you next. And I want you to just kind of shift it a little bit and talk about sort of where Jason was going, which is this is just kind of a step, right? There's a future, there's a lot that's coming. And do you think, one, it's a threat to our business, or do you think ultimately it's an empowerment, and maybe how?
Well, all technology goes through the hype cycle, right? So this is just the beginning of the next hype cycle for the next piece of technology. It was not that many years ago that I remember being in a session. We were supposed to be a 2-day workshop with a very large global tech firm who was selling a piece of software named after a character from Sherlock Holmes that was going to be for underwriting. And they had basically decided that they were going to replace doctors, and as soon as they got done replacing doctors, they were going to replace underwriters with AI. I made it through the first day of the two and went to the dinner reception that night. May have gotten in a really heated debate with the gentleman from that large tech company and wasn't invited back to the second day. Because at the end of the day, this technology only works if we let it work, if we enable it and we empower it. And there are places where that'll be good and important, but sessions like this and conversations like what we need to be having need to be about how we collectively want this technology to come into our industry and how we're going to come together in the adoption and where these technologies actually make us collectively better. Because if we want to make this go really fast, we can go to Microsoft and the OpenAI folks and give them all our data. And this thing could just rip through insurance in no time, because ChatGPT and OpenAI, it's as good as the corpus of data that it sits on. It's no smarter than we are. In order for it to be smart, we need to voluntarily give it our collective intelligence. And if we decide that we want to do that, that would be a great decision to make together. But if we don't, these are things that we can figure out, where do we want to plug it in? Where is it going to help us? Where does it advance us as an industry, as opposed to letting it just come in and take over like a virus?
Now, Reed, I saw you nodding there, and I'm going to remind you that you and I hosted our own little InsurTech summit in Milwaukee like 5 years ago, and we had that amazing whiteboard project that we all remember that. I still have a photo of that. I don't think we had artificial intelligence, so we had everything else, but I don't think we didn't put that on that board.
No.
But you guys at Ivans are always thinking about and talking about data and what you're going to do with it and how. So share a little bit about where does AI and the data thing, where are we going?
So first of all, GPT is pretty awesome. It's pretty fun. It's free. You can sign up for it. Go on there, sign up. It's totally free. It's pretty hilarious. My CTO wrote a poem for our CRO the other day with it, and it say something really nice to sign up for doing a good job last year. And he read it in front of everybody. We thought he actually wrote a poem, which is a joke if you know Pat. But it's really good. It's funny. I asked ChatGPT. I put in your question, and I put it into it to answer it this morning, and it said that it'll help streamline customer service. That's what ChatGPT, it answered for itself.
That's amazing. That's great.
But I'll say the other thing I put in actually, and Divine and I were laughing about this earlier, is I put in what is a great InsurTech idea, and it spit out if you guys sign up for it, just type that in. You'll see it's a legit product. So maybe it'll help bring new innovative products to market. Right? But I'll just say this. I mean, I was on a panel a number of years ago, and a couple tier 1 carriers up there, and it was all about AI, right? And they're investing millions of dollars, not the Diamond sponsor tier 1s, by the way. And they came to me and they said, okay, yeah, it's great. This is great water cooler conversation. This is really interesting stuff, but we're still communicating with each other via Accord forms and emails, and some people are even using faxes, right? And so it's kind of to Bill's point, I mean, it's all about how are you going to use it? And going back to my point earlier, if we're not even adopting and leveraging the solutions that we already have, this is so far out there. But it's really cool. Divine shared with me, there's, what did you say, Beautiful AI. Beautiful AI is a little extension for it. So you can ask it questions, and then it'll actually make a deck for you. It's a PowerPoint.
I should have done it for this, right?
Awesome? I know, right? I wish I had a little more time to learn that this morning. I would have done that, but it's really cool. It's cool.
I should have said, would you please generate the questions I should ask the panelists,
yes,
right?
Totally.
Probably would have beat the heck out of this. I don't know.
But seriously, everybody should try it. It's fun. It's really smart, and it blows your mind how good it really is.
It really is.
It really is.
You talk about something going viral. It's like a 5-minute wait now.
Oh, I couldn't get in this morning.
There's so many people using it. It takes 5 minutes.
It said at capacity, and I had to keep trying to get in. Yeah.
But that's this month's hype cycle.
Yeah, totally.
Yeah. So Jay, I'm going to ask you to bring it over to Marge. ChatGPT meets Marge. So what's going to happen?
I was going to echo some of Jason's thoughts. Our value is being consultative with our clients, and it's a vast insurance world out there. We've got to help them make sense of it, make good decisions. I see Marge having to do a lot of things that are not value added, at least not to her. The client calls and has a billing question. They just want to know some info on their account. The more things that we can do as an industry to make that quick and easy for the client and not have to go through a phone queue and get to Marge to get the answer, the better. And so in the past, web chat and this AI technology has not, to me, felt far enough along to insert, because you don't want your customer feeling like they're not getting anywhere. They're kind of shouting into the wind and talking to this thing that is not giving them any meaningful feedback, and it's a dead end. But it sounds like this is a radical step forward, so I think it's going to be interesting to see where it goes, because I think it's going to enable a quality experience. For Marge, it's going to be scary.
Yeah.
Because her job is going to change. What I talk to our people about a lot is, you are an insurance professional, and lean into that skill set. That's not a skill set that everybody has. And if you're consultative and using that skill set, then you're enjoying your job more. You're not doing these rote tasks that aren't really adding any value to your life. And you're worth more to the organization. right?
Yeah.
So I think it's good for everybody.
Yeah, I think it's ultimately, as you guys have said, it's a liberating and empowering thing, so embrace it. I'm sure there's ways to abuse it, there's ways to abuse anything, but we'll see. I think Marge will be all right. She's smart and she's good. I want to move a little bit and shift to something we were talking about earlier over at the table there. So if you go back about 6 years ago, the InsurTech space, there was a lot of investment going on, as many of you know, in direct-to-consumer InsurTechs. And we don't have to mention any names, but you know who we're talking about. And there was a lot of money being put into that space, and valuations were crazy high, some still are. And I'm going to go to you first, Jason. I'm going to ask you, because I've noticed a pivot, I think we all have, that some of those same companies that used to want to go direct to consumer have decided that the agent broker distribution model is actually maybe a little better. And it seems like the investors are also starting to favor investments that are in the IA space. And do you have any comments on that? Is that a...
Yeah, I mean, I can maybe just kind of share our perspective, because we obviously not only, we actually sell to a number of these large digital aggregators or insurance providers, so I can certainly give you some perspective on that. I think what I would describe to you is there's kind of commercial, there's personal lines, and within personal lines, and there's the carrier and then the agency side. And what I would say is, to your point, a lot of these carriers that have been selling direct to consumers have hit some pretty significant road bumps with high loss ratios and then also with high acquisition costs for customers. Some of the other ones that are on the agency side are gaining traction, not just the Gooseheads of the world, but a lot of the digital websites on the personal line side in particular, who Xywave enables a lot with a lot of our rating products. And what I would say is, personal lines, I think, is going quick to digital, particularly non-standard and the mid and lower end of standard. If you're high net worth, it's going to be still heavily involved with an agent, a human agent. But I think standard and non-standard is going to go online pretty quick, at least the quoting process itself. About 95% of our volume. We do about 40 million quotes a year now that we enable, and the majority of that is actually currently just quotes. The actual bind and issuance still is being done by an actual agent. I think commercial, our belief is that it's still early days. I know there's some big bets made by Applied and us in that, but it's still early days. The volume is actually still pretty low right now. And what's even more important is that the actual non-quote rates. And so a lot of your quotes come in on the commercial side, but the carrier won't actually quote it, and they'll move it into E&S. And so that is definitely something that's limiting commercial quoting products. But on the personal line side, I think it's happening real quick.
Bill, you and I have talked about this many times. In fact, I think I know your opinion. Why don't you share? What do you think about this pivot that we're seeing and so forth?
I mean, the reality is we work in a really complicated, complex business.
Yep.
And digital disruptors from outside the industry thrive on fixing high margin or high potential margin businesses that can be homogenized, that can be standardized, and building tech for businesses that can produce margin and throw off good margin is a great place to move into when you're in tech. When you're in a very heterogeneous, highly complex industry, a very people-heavy industry like we operate in, it's very difficult for large tech companies to come into this space and to get a toehold. It's not to say that if we don't continue to improve, that risk isn't somewhere out on the horizon, but by and large, the complexity of the transaction that we're managing. We were talking earlier, we sell a product where the cost of goods sold isn't known, sometimes until decades after the sale took place. Tech companies, VCs, don't necessarily, P&E funds, don't really love throwing money into something that they're not sure if, I don't think the commercial auto industry has been below a 100 combined ratio in the last decade. That doesn't feel like the kind of business model that a big tech fund or a big private equity fund really looks at and says, hey, that auto run by the best companies is going to run a 103 or a 105, so it's going to lose 3 to 5 pennies on every dollar of premium you collect. You know what I should do? I should put $1 billion in to go build a competitor to that. So there are a number of barriers to entry, but what I think they're realizing, though, is a substantial percentage of the total GDP of the U.S. trades through people in this room. And so the ability to bring tech solutions to this group of people is somewhere where they can produce revenue. And so leaning into the industry versus disrupting the industry is the more sensible play, and a place where they can make money and actually help us all get better.
Okay. Jay, is Gallagher in trouble?
I get to watch what happens in the UK with my colleagues in Gallagher, and it's been, what I've learned is that we are about 5 years behind where they are. So I can watch the patterns happening there and know that it's going to eventually come here. The good news is Gallagher's thriving, and independent agents in general are thriving in the UK. What is being bought digitally over there is the most, to Bill's point, the most simplistic, basic products, and it's very much a one-off purchase as opposed to an account purchase or relationship. And I've looked at digital agencies here in the States and see the same thing. They go spend a lot of marketing dollars, get people direct to consumer on the internet, but ultimately they build a book of business that is a lot of small policies, and that customer's only buying one thing from them. That's not where our value is, and that's not honestly the best business. Yeah, so I think we're in a good position, because when people are insuring their livelihood, their commercial enterprise, they want to know that everything's been covered. It's a little daunting to go through an online application and push a button and just hope for the best with your business. And same thing with your home. Nobody wants to have that unpaid claim. So I think we're in a great position. We just need to lean into our position as trusted advisors.
Yep, absolutely. Reed, you built and sold a company not long ago, and obviously it had investors, and I know some of who they were. It was an IA channel InsurTech. It's now part of the Applied family, right? Would you, if you were going back, sort of no regrets, right? Best to be in the IA channel? Talk about that.
Yeah, I mean, it's pretty simple. Direct to consumer is expensive. That's it. I mean, it's really expensive. And then the other fact is they don't really convert all digital. All digital online, the conversion ratios are not that good. So the customer acquisition cost is extremely high, and your conversion ratios are low. And then the business you put on the books, and I know this because of my former business, you name it, I worked with all those guys. We built custom stuff for them, and you know, if we didn't work with them, they're friends of mine. And it's so expensive, it takes so much time, and the business that you get, to Jay's point, is not that good. It really isn't. And so, you know, I'll tell you, this is my theory, you know, quote me on this, but, and I know this, the captive carriers are now coming into the IA channel. Yeah. You're gonna see captive markets start to come in and bang on your door to offer their products. Why? If you think about their business, there's only so much total addressable market for them, right? Yep. And they're battling the IAs. Well, why don't they just start working with the IAs? Oh, there's an idea, right? And so if you think about that, then what does that mean? Isn't it all become independent long term? That's what I think. But, and we've seen it happen already, and it's going to continue to happen.
I think you're right, Reed. So.
Yeah, and that's why we're all here, to make sure that's exactly what happens. So I want to get back a little bit onto technology. I want to talk about agency management systems. I'm coming to you in a minute, Jason. Sure. So again, we're trying to look into the future a little bit, and agency management systems are the foundational system that we all use at our agency, so everybody's got one. It's kind of the table stakes in terms of technology, but it has evolved quite a bit for the better, I think. And I think even the possibilities of what we can do with our agency management systems and how they can help us has evolved. And Jason, you might be the most qualified person in the room to talk about this. What do you think?
You know, I don't know if I'm the most qualified, but I certainly can probably pine on this topic, because I've kind of have a lot of opinions on it. And I want to be careful what I say, because I know a number of you are our customers, with the SIS platform or Agency Matrix. So I'm going to be, kind of cautious in how I say this. But I think there's a point now where the AMS has to be rethought in what its real value and real objective is. And there's kind of three, I think, impediments to what an AMS, and Reed obviously ran an AMS company, so he can certainly add value on this conversation as well. But the first one is that historically the AMS was thought of as the only system that you needed. And so it became this very bloated kind of system that does everything. When you break down what AMS does, it actually has 12 core functionalities, of which about 80 to 90% is only 4, right? Which is your accounting, it's your commission reconciliation, it's your service delivery, et cetera, right? And so ultimately the AMS needs to be modularized, kind of like a Happy Meal at McDonald's. You don't want to always eat the whole Happy Meal. You just may want a burger or fries. You want to start, obviously, consuming your AMS in components, not the whole thing. The second challenge, it's got to be open standards, open integration, right? It's got to work with every system. It's your data. You don't want to be held hostage by your vendor. And so opening up the system, it's not just a cultural issue. It's also, in some cases, for some of the other players, an issue with building open APIs, which is a technology impediment. And the third, I think, major impediment is really the cost. Right now, it's the largest line item in most of your, expenses. The reality is most of your money should be spent on growing your business and taking care of your customers, not, doing your back office. And so Xywave obviously has been in the midst of trying to transform this, obviously with our purchases of these AMSs, to kind of rethink about what the world thinks of the AMS and what its value is.
That was perfect. It's almost like I can move on. No, no, actually, Jay, I want to hear, you're the user, right? I mean, and a big user, obviously, and probably multiple agency management systems, actually, that you have to deal with. Where do you think the agency management system's going as a platform? I liked everything Jason said, but how do you guys see it?
Yeah, early on, so small business and personal lines in my group are both on Applied's Epic product. And that's been good, but early on, a lot of these InsurTech tools that we wanted to use, I kind of went on wild goose chases. I would spend all this time exploring them only to find out that there was really not a good way to get them connected into Epic. We also use Salesforce, and so those are really my two big components of my tech stack, and I gotta make sure everything works with that. I've been encouraged the last couple of years. InsurTechs, I think, have gotten the message and are trying to make sure that they can easily connect, and you don't spend as much time and money trying to do custom integrations as you used to, which even in a big company like Gallagher, we're not good at. I mean, they're hard.
They are.
It takes a lot of smart people doing the right things for a period of time to get those completed, and certainly it's not easy at the independent agency when you don't have staff to do it, right? So I think we're headed in the right direction as an industry overall.
I'm sure we are too. We invited another gentleman that couldn't make it this time. His name is Michael Libor. He's the CEO of a company called Insurance Gig. And Michael's 100% focused on this idea of easy integration. I don't know if he's going to get there, but he's 100% focused on that. I want to go next to Bill. And Bill, I want you to talk a little bit about the insurance company version of this, a policy management system. What's happening with that? How are you guys evolving those? How's that evolving?
So I want to piggyback on what Jason was saying. On the broker side, it's the same situation on the carrier side. Making shifts to your back-end systems is probably one of the most expensive, most risky, and least rewarding things that we spend money on as an industry. Right? It's up there with putting a new roof on your house. Like, you have to do it every couple of decades, but man, when you write that check, it is the least rewarding check that you write all year long. It's like you can't even see the new roof, by and large. We do it because we have to, not because it's actually making our business meaningfully better. No offense to you guys, but there is a reason that Applied, that our friends from Vertafore in the room, that so many of you are sitting on multiple generations back of the systems and that they're still supporting those legacy systems, because it's not a rewarding investment. It's not, we were talking about ROI. It is not a great ROI return. So it's really down to this next generation of technology that starts to take the components apart, allowing for easier integration, allowing for us to swap out the components that are most important, and starting to move that around and really streamlining how systems talk to each other and making it substantially easier to pick and choose the technologies that you want, so that if a Salesforce is the right tool for you in the front end and you want to use that with an AMS 360 in the back, or like that becomes easier and easier to do. because how we put the puzzle pieces together is where the value gets created, not actually purchasing the pieces of the puzzle.
I couldn't agree more, and that's why I saved Reed for last. Because Ivan's, right, Reed? The pipes.
Yes.
The pipes. You're connecting the agency management systems to the policy management system. So share a little bit about where the pipes are going. What's the potential for connecting these things and the data that will give us?
Innovation in this industry is all about connectivity. I'll say it all the time. It's so true. And so when you think about the agency management system or the policy administration system, kind of the same world, just different customer in a way. You can even argue kind of the same data model. There's a lot of similarities.
When we're lucky.
Yeah, yes, well, this is another conversation. But yeah, I mean, so the pipes connect all of that and all of the connectivity. And when you think about those systems, those systems have their core features, like Jason was saying. But like I'll use Salesforce as an example. So Salesforce is a CRM. Well, you could argue that Salesforce comes with marketing automation. Like I can automatically send an email based on something happening in the system. A trigger sends an email. Well, that's kind of marketing automation, right? But that's not deep enough. So I would purchase another solution, a Pardot, a Marketo, a Eloqua, whatever you're into, to further that solution on a whole nother level. I may want to build something completely custom to me. The same thing goes for everything. Customers, although accounting is even a really core feature of both of those systems, a lot of people pick and choose their own accounting solutions that are then connected. Jay and I were talking a little bit about this earlier, and I asked Jay, I was like, well, what does like this perfect solution look like for you? And he said, look, one single solution, right? But that doesn't, one interface, one system of record, doesn't mean it's just one actual system. Many systems connected into one. So the end user is working in that, and that data is spread all across. Now, how do you make that happen? That's all connectivity. It's carriers opening up their APIs. It's the agency management systems opening up their APIs. It's all the InsurTechs opening all that up. It's interesting what Libor is doing with Insurance Gig. It's basically like the Zapier of insurance. I mean, he doesn't like anybody saying that, but I'm just going to say it.
I know, he doesn't like it.
Right? I'm not wrong. And so, but it's interesting. It's connecting all of those things. Like he says, it's connecting the dots together. And so when we look to the future, the agency management systems and the policy administration systems are going to get bigger and bigger and better. They're going to include features and functionality that a lot of these InsurTechs are doing. But that is what it is. You still should have choice to be able to connect up all these other solutions into that one single solution.
And I just want to tie onto that, and Jason said it too. It's not the same recipe for every agency,
no,
right?
Heck no.
We're talking about connectedness between components that you get to choose for your agency. What's appropriate for Lou Moran's agency is not appropriate for Gallagher. And I was talking to Steve Anderson before, I hope he's in the room, and Catalyt, for example, is trying to help agencies try to figure out what's the right recipe for their agency, for what they're trying to achieve. And it's different for all agencies, but there's common best practices.
So one thing at Ivans, we released a product last year called the Ivans Distribution Platform. It's basically pipes for commercial lines. And so if you want to rate commercial lines, you connect up to us, we'll give you the pipes. But that's it. There's no front end. There's no solution. You have to be a technology company to go and build that, right? So who is the customer for that? Well, anybody that wants to build that thing. Or, these technology companies like a Tarmaca or Semsi or whoever who is already doing that and they want to connect into those markets. But here's the thing. We get brokers, digital brokers, that are saying, I don't really want to use Tarmaca, let's just say. I want to build my own thing and control my own destiny. Well, we have that API and it's there for them. Now, at Ivans, who's our customer? Our customer is the carrier. We're providing that to those vendors and the carrier's paying for it. Again, the carriers are building all of this so that they can be right there at the distribution and having all this connectivity so their customer, which is you guys, the agent, can be as efficient as possible. Therefore, you write more business with them. It's a pretty simple recipe, but highly complex. So yeah, I think that's just it. It's just having that openness and everything connected, and then those systems being your home system. So I don't really foresee them going away ever. That said.
Yep, no, I agree. All right, we're running down. Last question, I want you to look over the horizon. I want you to really kind of crystal ball this. 5 years from now, 7 years from now, Bill, you first. What's your biggest sort of prediction about the IA channel and technology 5 years from now? What might we be surprised or not surprised? What's going to happen?
Well, I would say my biased hope is that we, Adam hit on this in the prior panel, and all of the comments here have kind of hit it a little bit, but to me, it's around data, ownership of data, and how much we are replicating, rekeying, moving, that we're going to figure out. We've talked about the golden record. Like, we are going to figure out a way. And the example I use all the time is the portable health record, right? If we as consumers all think about how much we hate when you start with a new doctor and you have to fill out that weird photocopied form that's 17 generations old as an intake, and just how many times we're replicating our personal data, the data about our business. My belief is over the next 5, 7, at least in the next decade, that data is going to stop moving, and all of us are going to move to that data to work.
Yep, and you and I, we both agree on that. And by the way, the Big I InsurTech Task Force officially has said we want to be part of that with you guys. So, love doing that. Jason, I'm going over to you. What's your crystal ball?
Well, I first wanted to say, hey, feel free if you want to reach out to me at any point. It's jason.lew@zywave. Always enjoy conversations. Secondly, this is a tough question. I'd say like the 3 big trends, and then I have to pick one. But the 3 big trends I would say look out for, obviously, we would really say digital quoting, digital commerce, really a big deal. Data, as Bill said, is a huge deal. And the third one, obviously, is AI. If I have to pick the impact, you said 8 years out?
Yep.
I'm going to go with big data. I'm going to go with Bill. I do think the market transformation around big data is significant, and the predictive analytics of prescriptive is going to be significant. And what you're also seeing now is carriers wanting a lot more data about what the agencies are doing. We have about 1,000 carrier customers, and that is constantly a request. They want insights into why are they winning, why are they losing, who are they losing to, et cetera, et cetera. So.
Okay. Reed, what do you think?
How long did you say, 10 years?
Make it 11.
11 years? Well, a few things. I think that, I'm just going to go like overall industry and technology. Like I said, captives are going to become independent. It makes a lot of sense. Maybe not all of them within that time frame. I believe that policy administration systems and agency management systems are going to come together. You'll see some mergers that will happen in the future, where a Duck Creek, a Guidewire could merge with, you name it, a Vertafore Applied, a Zywave, right? And you start to bring that together. That said, why would they do that? Connectivity, bringing everything together, streamlining the overall flow. That would solve so many problems for everybody in this room, and everybody wants that, right? It'll help us be much more efficient. The golden record, I don't know, man. That's a long tail. I'm going to be honest with you. I could see it, though. We all want it. I mean, that's the holy grail. But I think a lot of people will push back, and that's going to be tough. It's going to be like direct-to-consumer in that way, A lot of education.
And this is a whole separate conversation, but I'm betting regulatory is going to push us really hard on this one, too.
Yeah. Yeah.
You watch all the big tech companies, and they're testifying in front of Congress.
You and I agree on that. I think it's half about defense, Reed.
Yeah.
If we didn't have to defend, then I wouldn't maybe go for it, but I don't want to be left out. These guys don't want to be left out. Yeah. That's the danger, right?
As soon as the plaintiff's attorneys start suing you guys for data privacy issues, it's going to I think that's when the acceleration's really going to fly through.
Fair enough.
Because complying with your EU privacy regs, California privacy regs, whatever else comes, that stuff's going to be tough.
All right, Diamond sponsored.
You know what? We'll do a whole panel on that at the next event. All right, Jay, I'm bringing it back to you, the broker on the panel, the guy that makes a real living here, right? And my oldest friend on the panel. What do you think? What's your crystal ball?
So we all have those conversations with our clients 2-3 times a year. And why are we calling them? We're building a relationship, right? We're maintaining a relationship. We're also doing a little bit of fishing during that phone call. We're trying to find out, hey, what's changed in your business? What's changed in your life? Let's make sure that we're still meeting your needs. Let's have that ongoing dialogue. And I think we have a nice convergence here where our industry is realizing the power of the data that we have. To Reed's point earlier, not all of us are probably putting everything in our systems that can help us harness that. And so that's something I think about is, are we really utilizing it so that we can get the power of our own data? But the mix of understanding your customer and having the relationship is pretty powerful, right? I think in the future, when you have our own data harnessed, the power of big data, and the AI that we're talking about, we're going to spend more time looking for patterns, analyzing, and making meaningful reach out at just the right times to our customer.
Yep.
And we're going to see a much broader, more effective cross-selling, is what I would call it, approach to other lines of coverage and things that we can meet their needs as agents, things that we hadn't explored before. But we now understand their needs better, and we can hit them at the right time to have a good conversation.
So you're saying Marge is going to get smarter and better and be more helpful, and we all are as well.
For sure.
That's great. All right, that's the perfect way to finish all that. I think I'm out of time, unless someone wants to correct me.
You can do one or two questions, Chip, if you want to.
That would be great.
Our board meeting begins at 2, so.
I'd love to hear a question from the floor, please.
I have a question.
Mr. Rustbolt.
For Bill. Last night at dinner, we were talking about carriers and building new tools for agencies to use after even getting input from agencies. And then one of the more frustrating things for carriers is that those tools are not deployed or used in the agency. How do we correct that together? Because you're obviously spending millions and millions of dollars developing these tools to make agencies more efficient and productive. Is it a lack of education with agencies? Is it a lack of time? Is it being deluged, as we've talked about today, by tons and tons of InsurTech vendors, et cetera? How do we get at the fundamental issue for the carriers?
So I wish I had the answer to that question, Bob, because that would solve this entire problem and we could all go home, right? The reality is we're spending millions. All of my carrier competitors are spending millions. Collectively in this room, you're all spending millions. Our partners are spending millions. And when we start to look at how much the needle is shifting towards improvement as an industry, it's not moving nearly as fast as the level of investment would suggest it ought to be moving. When I started bugging Chip about having this meeting and starting to bring people together, this was about trying to start a dialogue so that we can all better understand what each of us is investing in, what each of us needs, and how to collaborate. There's a term we use a lot around co-opetition, right? So it's this idea that you guys have figured it out, right? The Big I is a perfect example. Many of you compete against each other in the marketplace, but you also can come together and cooperate on common problems. As an industry, historically, we've been really good at that. In the last decade or so, as an industry, we've kind of fallen off that. And I personally feel that we're at a point when we need to get back together, get back to the table collectively, collaboratively, because these are going to be knee-to-knee conversations in order to cross this void. It's not going to be as simple as just build it and they will come, spend more money and throw that at the problem. We need to partner together to solve this collectively, because we can't keep wasting millions. There isn't that level of margin in the industry. These investments need to be actually making us collectively better. And to date, the data would tell us that it's not.
You want to add to that? Sure.
Yeah, I mean, Bill, I appreciate that. I'm very passionate about this, and I think Reed can maybe comment on this as well. But this is an area that Xywave has, as I said, been spending also some time on, and I think Applied is as well. Is how do we actually create a much more connective environment or ecosystem? Obviously through Ivans in your case, and in the case of Xywave, I think we would turn that question on its head, which is why are the carriers saying you should use their tools? Why aren't they embedding their data and their policy and all of their into your tools, which you use, right? And meet you at where you are, which is the client, right? And so when I talk to our carrier customers, that's the conversation I have with them is, that we think we can help bridge that gap. Obviously, we've done a recent acquisition with Clarion Door where a lot of these carriers don't actually have open APIs to get onto Ivans or other systems. And so we bought a product called Clarion Door that actually helps carriers actually open up APIs so they can actually then integrate with broker tools and also provide broker data. So I just would turn it on its head. Was I think there's got to be this mindset of you got to meld those and use the tools that agents are already using. I think would be
and this is where we need your help to bring my competitors to the table to have this conversation. Because at Travelers, we've spent millions making sure that we have open APIs and integrate into every platform. And I can tell you, for example, in our mid-market business, we've moved the dial from email to digital, API submissions by about 30 basis points in the last 3 years. So a rounding error.
There's two entities I see that could play that role in bringing everybody together. One is Ivans. Reed, you're perfectly situated to do that. And the other is Accord, a board that Bill and I both serve on, is situated to do that. So if it's going to come together, it'd probably be through one of those two entities, I would think, or both.
And I would hope ACT would be the third leg of that stool.
100%.
Absolutely. Yeah, and that's what I was going to say. I think it's actually a three-legged stool, Bob. I think it's ACT, it's Accord, it's Ivans. It's a critical mass. We've talked about this a couple times. What's the right consortium, the right alliance?
We can still compete on a ton of things, but there is a certain amount of we need to row the boat in the same direction, or we're just going to keep spinning around in circles in the pond. And that's where we are right now. We're just spinning in circles, and it's incredibly frustrating for all of us.
I just feel like I think part of it, obviously I'm passionate about this topic. Obviously there's a technical issue that you all just kind of described that we all talked about, but there's also an enablement issue is with how quickly new products are getting rolled out from carriers. How do they enable agents to be able to talk more intelligently about it, but also talk about risk mitigation with that? And I think there's a role that Zywave can play and others, and actually also helping the producer enablement piece of it, which arguably, people are ultimately what turns the world, right? And so it's not just a technical problem. So
I'll just add, there's also carriers that don't want to. They have the ability to, and they don't want to.
No way.
Yeah. Not the diamond sponsor. By no means. I'm not joking.
But this is the room that fixes that.
Yeah, very true. And that's the only way you can get them to move. Yep.
That is
through the distribution.
The people on this panel can't make that change.
Yeah.
You guys can.
Mm-hmm.
Yeah, this body has a role in that leadership to bring that together and say, we need to do this together. And that's why we're having this meeting today, and that's why we'll have more like it in the future. I probably should wrap it up.
Yep,
Yes,
we're
Mr.
going to
Costello.
wrap it up. First of all, I'd like to thank both panels and Chip as moderator. Thank you for being here and doing this today. Great job.
We're done.